Hey, everybody. Welcome to Swan Signal Live. I am your host, Sam Callahan, the lead market analyst at Swan Bitcoin. We have a very, very big time guest for us today joining the show. But before I get into that, I want to talk about Pacific Bitcoin 2024. This is your time to lock in the cheapest tickets. Go to this QR code. Oh, that one. Go to this QR code. You can get early bird tickets. That's the cheapest prices you're going to get. You can lock those in and you can get a full refund by February. So there's not much risk to doing it now. If you think you're going to go to the conference, now's your time to lock in those cheap prices. So go to pacificbitcoin.com and buy those tickets today. And so for the show today, we got Adam back on. I mean, he doesn't really need an introduction, but if you don't know him, he's the co-founder and CEO of Blockstream, and he is a cypherpunk. He has been involved with Bitcoin from the very beginning. He's actually cited in the white paper. We're going to talk about some of the things that Blockstream is building in terms of infrastructure, as well as where we are in this cycle and what he's excited about moving forward into the halving. And so without further ado, I want to bring on Adam back. Dr. Back, welcome back to Swan Signal Live. So happy to have you here.
Yeah, thanks for having me on.
So I wanted to start. I mean, you are cited in the white paper, and the white paper turned 15 yesterday. So we've gone from a 9-page white paper to a full-blown monetary revolution in 15 years. I would just love to hear some reflection from you, like where we're going, how we got here. I mean, you've been here since the very day one. So love just to hear your thoughts on Bitcoin white paper turning 15.
Yeah, I mean, it's a long time when you look at it that way, right? And I mean, of course, myself, I didn't really actively get involved until 2013, 2014 or something, but even that's a long time now. And of course, it's fun along the way, and there's lots of excitement in the market and in the technology development and so on. So yeah, it's but I guess people are feeling that there are more opportunities opening up for Bitcoin and wider market acceptance, as well as the Bitcoin startups such as yourselves providing Bitcoin related sort of market services, helping people stack Bitcoin, plan to cold store them in different ways. There are now, financial institutions starting to offer products as well. So, and then of course you have the Bitcoin spot ETF discussion going on in the US. Perhaps coming early next year. We'll see how that works out.
So how do you think through that? Seeing kind of the merging of Wall Street and Bitcoin. It's kind of strange, right? Because Bitcoin is built on this ethos of, taking power away from the banks, but then you see the spot Bitcoin ETF, you see different services and financial products being developed around Bitcoin. I guess that was naturally going to happen, but what's your response to kind of seeing it unfold right before our eyes today?
Yeah, I mean, I think some people are, kind of in two minds about it, right? Because they're sort of worried about whether it will centralize things, and of course, an ETF is, a not your keys, not your coins kind of situation, and that's literally true as well, right? I mean, if you are somebody who, the establishment sends an order to a financial institution, they can and will freeze assets, and that would apply to a share portfolio or a bank balance or units in an ETF, including a Bitcoin ETF, right? So it's clearly not as primary and direct in terms of Bitcoin's differentiated properties. So I think Bitcoin can be both a savings technology and a bearer money and savings technology, so that and I think it's important that a reasonable proportion of Bitcoin remains with users with control of their own keys, either in a straightforward way, they have their own keys, or in some kind of collaborative custody way where it remains non-custodial and as a service sort of helping them with backup management.
Yeah. And why? I think people will kind of look at that and say, yeah, there is a risk of centralization of Bitcoin with a spot Bitcoin ETF. It all ended up in one custodian. And if that custodian, something happened in a hack, that would certainly harm the people whose Bitcoin was being held in there. But at the protocol level, doesn't really matter if one institution holds a ton of Bitcoin, they don't have any power to control the rules of the protocol or change it. But you said it is important that, a decent amount of the Bitcoin is held in keys. So can you explain like why you think that's so important that, a lot of Bitcoin is held in self-custody or held in collaborative custody solutions?
Yeah, I mean, I think, ultimately the value proposition for Bitcoin, that makes it hard for, banks to compete with it, is that it's bearer and permissionless and more sort of internet-like, cash-like, right? So I think it is true as well that Bitcoin could it could succeed financially as a savings technology only, but that would be disappointing to and miss a lot of the potential, because I think this sort of permissionless bearer open network technology is a key part of pace of innovation and providing new value to the world, swinging back towards efficiency and self-sovereignty. I think a potential risk that ETF providers could have is in the event of some kind of a new sort of fork debate like the one that occurred in 2015, in that the fund manager presumably would sort of listen to corporate lawyers about what they would argue is in the financial interests of the unit holders, right? And so, it's sort of like buying a share or something. If you don't own the share and it's inside a managed fund, maybe the fund manager has the votes for it or something. So
Yeah.
Bitcoin policy is not a vote, but still they would be somewhat influential. But I think ultimately, it's been shown through the 2015 events that Bitcoin is actually much more resilient at being immutable and preserving, end users' interests, particularly people who run their own nodes and control their own keys and are paying attention, tend to set the direction. So, yeah, I think those are considerations.
Yeah, and how do you think through the Bitcoin scaling debate? Yeah, I feel like the debate's kind of moving to this idea where the base layer should be ossified. There should be very little changes to that, because you never know if there's any kind of unforeseen risks that you didn't think about by introducing any kind of change to the base layer. No matter how much more functionality or efficiency you can get, you don't know if there's any unforeseen risks. So we shouldn't mess with that at all now. It's too critical. We should move that all up into second layers. Where there's other people that said, like, hold on, we actually need to do something here, for us to get what we want in terms of this other functionality. What's your take on that, the ossification of the base layer? Do you think we should just be done with that, or do you think we should move it all the way up to second layers, or do you think something will have to happen in the base layer in the future for Bitcoin to meet its let's say the pinnacle of what it can be?
Yeah, I mean, I think there's generally quite widespread respect for the idea of ossification and the risks of continuing to see a rate of change in a base protocol. Now, of course, the protocol changes tend to be opt-in, backwards compatible
Right.
today. So that's a key factor. But the challenge is that to ossify, we might need some changes. so particularly to support additional layer 2 functionality, which is still an R&D area almost, right? So I think there are some candidate technologies that might get a bit closer, like Simplicity, which is a kind of second generation script language for Bitcoin, which is more generic and so offers some potential to get closer to ossification and more expressiveness of things like BitVM, though at the moment it's early stages for BitVM, and it's still people are still trying to work out and develop the idea to find out what the ultimate limits would be.
Yeah, could we maybe dig into that? Maybe double click on BitVM, because it was released by Robin Linus. It was titled BitVM compute anything on Bitcoin, and kind of explained that you could express Turing complete Bitcoin contracts. It doesn't require any changes to the network's consensus rules. I wouldn't say, you kind of like poured cold water on it a little bit in the replies, but also kind of walked it back and said, okay, this might be something different. For somebody who doesn't understand this stuff at all, can you maybe try to simply explain what BitVM does, what it might be able to bring to Bitcoin, maybe some of the limitations it has? I'd love to just hear your thoughts about it.
Yeah, so I mean, I think my original comments so far seem like broadly accurate, but Robin and other people interested in it are trying to expand the scope and make it a little more general. So basically, it's in its current form, it's a bit like Lightning. So there's two parties that are engaged in some kind of activity, which might be betting on the outcome of a chess game or some financial activity, and so they're exchanging off-chain zero knowledge proofs about taking turns at making some strategy decision, proving to each other that that's what they did. And then the way it works is the prover is going to put some Bitcoin in escrow. So it's a bit like, with a Lightning channel, somebody puts money into the channel, and then if they cheat in some way, the other party can take some funds out of it. So it's a sort of penalty payment. So that situation is there as well with the BitVM. And then the sort of new innovation here is that they make the observation that you can prove equivocation compactly. So the full zero knowledge proof is thousands and thousands of gates and sort of a big object that would be probably too expensive to reveal on the chain to resolve a dispute. But they have this concept of equivocation where if you try to cheat, you'll have claimed inconsistent things off chain, and then you can compactly prove with a Merkle tree inside a Taproot transaction that the other party equivocated, i.e. he told something inconsistent off chain to you, and then you can prove that and use it to claim what you should be due, or assert that you won the game, or whatever the outcome is, right? So now the interesting thing for how much scope could you get out of it is, could you change it from a two-person Lightning channel like activity into the miners do the verifying. So there's a prover and a verifier. If you could move it so that the miners do the verification and the prover just puts up some kind of bond or like an amount of money that says they're telling the truth, unless you can prove otherwise, you could take the funds. That could be interesting, but it's a bit of an open question at the moment, because if you let if you give that task, the verification task, to the miners, well, firstly, there's a kind of like with Lightning, there's a multi-sig, and if it's two-party, each party has a private key, but the miners collectively don't really have a private key because they're anonymous. And then secondly, if you just remove the private key for the verifier, well, now you have to trust all the miners, and there's a risk there that if one of the miners sort of colludes with the prover, they can just they'll detect the equivocation but choose to collude with the prover and not give up the money, basically. So because it's sort of, there's more people in there, there could be collusion. So it sort of falls back towards looking a bit like a drive chain, where it's like we trust the miners, and if something goes wrong, you have to do something with more human involvement. So they're trying to push on that, to see if they could make it a big multi-sig instead of one verifier, lots of verifiers. So that's already a step forwards, but I think it's still a bit of an open question how to make it fully general.
Yeah, and I always get asked by people this, and I don't have a technical background, so sometimes it's hard for me to explain, but I would love for you to just maybe explain to people, when you say express Turing complete Bitcoin contracts, what does that mean exactly in like layman's terms? Like, what kind of like additional functionality could you potentially see on Bitcoin if this did work and we could express quote unquote Turing complete Bitcoin contracts? Like, what does that actually look like?
So I think they just mean, I don't think it's strictly necessary to be Turing complete, because Bitcoin scripts are more about verification than executing a program. But that's a kind of, computer science small detail. So I think people generally mean that it's, that you could write a more complicated program with state or something like that. And the challenge with that is, like, firstly, they get built, they get big. Secondly, with a lot of state in the chain, it gets inefficient. And thirdly, it seems to be hard to make such kind of contracts secure. So Bitcoin's approach has been to have sort of compact, simplified contracts. And so, for example, the Simplicity next generation contracting language still tries to keep to that Bitcoin model, just with more sort of self-extensibility and expressiveness.
Okay. And when we look at, you brought up kind of drive chains and different ways to scale. And what would be the difference between, say, a drive chain and a side chain? And I think that will help people kind of set the stage for what I want to talk about next. Could you maybe just explain the kind of the differences?
Yeah, I mean, there's an earlier paper that Blockstream, some Blockstream co-founders published, going back some years now, around the time the company was incorporated, 2014, about sidechains. And there were two variants that we described. One was a sort of peer-to-peer one, where miners could, force a protocol to secure the peg. Ultimately, you're sort of relying on some game theory and some fraud proofs. And then a drive chain is a sort of simplified version of that, which doesn't use the fraud proofs. And there are some trade-offs there, which are, a topic of debate in a drive chain community. And then the other type of sidechain is the federated sidechain, and Liquid is an example of that. Rootstock is like that too. And there are a sort of a collection of Bitcoin ecosystem companies, like exchanges and prop traders and wallets, and people who are already in business providing Bitcoin related services and with data center operations. And so then they run, some hardware with an HSM that provides that kind of security. And there's a way for that network to dynamically evolve, as newcomers join and things like that. So that's the type of network that's more widely deployed right now, because the peer-to-peer one appears to be not possible to implement directly on Bitcoin without some more opcodes, which we don't have. And there were candidate things implemented to do that, but it's a kind of, it's a complicated trade-off. So I think that's the question, really, which is the best way to sort of incrementally move forward the security picture for sidechains, whether that's a drive chain or some more opcodes or some more expressiveness. So it's taking some years to, to arrive at the next step, and we'll see what that'll be.
Yeah, I was wondering if you could maybe elaborate a little bit on Liquid. And from my understanding, it allows for the issuance of other assets on Liquid, right? There's been a few different ones already that have been issued
Right.
on it. And recently, Lightning Labs announced Taproot assets, which allows for the issuance of assets as well. What's the difference between like Liquid and something like Taproot assets? And when I look at Liquid, it seems like it already works. Like it's already happened. There's already been assets issued on it. Why are some people kind of looking at different ways to do it instead of just utilizing Liquid? Maybe talk about some of the trade-offs there.
Yeah. So, I mean, I think what Liquid does, as you said, is it has native support for issued assets. So there's a peg, so you can transact Bitcoin or like Liquid Bitcoin on the Liquid network, and then with the issued assets, issuers can create more. So there are Tether, there are some security tokens like the Blockstream mining note, a new one which we just closed the first series of last week called the basic product, and that is Blockstream Asic. So we can talk about that later. And then you can transact with these. You can write smart contracts with them, like simple smart contracts like a trustless swap, a limit order where it's non-custodial. An example of that is the SideSwap app, which has trustless limit orders. And you can, so I think the Liquid experience, for example, is a lot more Bitcoin-like in terms of, you know, the usage, the backup. You can use a hardware wallet or a software wallet. You have a seed as a backup. There are no channels to manage. And so that's the kind of experience. And then there are other ways to do assets historically. So there was, you know, the color coin projects, which saw a little bit of use. And then there are these new kind of versions of that, one of which is the RGB project, which has a few wallets and some active development. And Taproot Assets is an RGB-like thing. I think it's maybe not format compatible, but it's essentially the same thing. And what that does is it sort of goes back to the color coin concept. And if you want to issue an asset, then it involves a Bitcoin transaction. And if you want to complete a transfer of an issued asset, like a stable coin, that also creates a Bitcoin transaction. And then to make that more scalable, they both consider putting Lightning on top of these sort of color coin types of transactions in effect. I think the other thing that it is a bit of like an R&D effort on is this concept of client-side validation, where there is data sort of transferred and backed up by the user's wallets that never gets broadcast with RGB and Taproot assets. So that's a new direction. And it means that, you know, over time, when you transact with somebody, you have to give them a lot of historic data, like all of the inputs back to the asset issuance. You have to pass that onto the next wallet so they can verify it. And it sounds a lot, but, you know, ultimately, if you run a full node, you have to download everything anyway. So maybe it ultimately is sort of a similar thing in concept, but that's one of the differences. So, you know, I think, you know, philosophically, in a way, Liquid is simpler and more elegant because, you know, the security story for the issued assets is much simpler. Those assets only exist on the Liquid chain. The trade-off is more in the peg Bitcoin, right? So if the peg Bitcoin is for fees only, then, you know, I think arguably Liquid has all the security you need. You know, you can run a full node, you can validate everything about it, and it also provides confidentiality, which is a nice feature as well.
Yeah, the confidentiality. Like I've learned a lot about Liquid over the last couple of years, and you know, I think it's underappreciated right now in the community. I think it's really quite a feat of technology that you guys build with Liquid, and so I can't wait to see it continue to get used. And you mentioned the basic note that you guys just introduced. It's a Bitcoin denominated investment in undervalued mining assets, and from my understanding, it's trying to take advantage of the differences in price between Bitcoin and ASIC machines. And, you know, you've seen ASIC machine prices really tank after 2022, and they're kind of still depressed. And you guys are starting this fund where you're essentially trying to acquire and store unused ASICs in North America and then strategically offload them.
Right.
Can you just speak on why you guys started to create the basic note, maybe how you did that, and what you guys expect to achieve with the basic note?
Yeah, I mean, it's sort of based on, you know, the experience that in 2021, the company bought, like Blockstream bought some miners, some ASICs, in order to have a supply to sell to institutional hosting customers, because we do kind of co-location or hosting for Fidelity and, you know, a number of other public or large funds primarily. And they would sometimes come and say, well, we want to start mining, you know, if they're new to the space, which is not the case with Fidelity. They would say, well, we want to do some mining, and they'd expect to just buy, you know, miners off the shelf. And like, it doesn't work that way. You know, there's a 6-month lead time on ordering. And so we bought some in advance. So what we observed is that there's a big price swing in the price of ASIC. So they kind of, you know, maybe they'll sell for like $25 or a little less in a bear market direct from the manufacturer. And in a bull market, like the previous bull market when we got to 69,000, they went all the way up to 120 or $130 terahash. And what we noticed is that's actually a bigger price swing than the price of Bitcoin at those 2 price points. So in a way, if you had, speculatively bought those new ASICs at the bottom of the market, held them until the bull market when there was surge pricing and sell them back, you could actually make a Bitcoin on Bitcoin return. And so that got us to thinking, well, there's an opportunity at this point in time where there's a sort of additional upside going on, which is this time there is actually a surplus of miners. So there are people who sort of overbought miners on pre-order during the bull market, and the lead times got very long, so they would maybe looking at a 9-month lead time, and then their miners would arrive, in 12 batches over the following 12 months. And so some people are, still getting the tail end of orders they made, 18 months ago, and there's a shortage of hosting, so they are storing what they call it in the industry is new on pallets. So basically shrink wrap boxes of miners on a shipping pallet in a warehouse, because they can't get the hosting, or they can't build the hosting fast enough to power them up. And so for ourselves, we sold out of hosting, and so have most other hosting providers. And so, that means that you're no longer buying from the manufacturers, but you're buying new on the secondary market potentially, and those prices are probably below manufacturing cost. And so there's, that's one opportunity that you're buying a brand new miner, perhaps for 15 or less per terahash, where a manufacturer wouldn't want to sell it below 25 because they've got their build costs to factor in. And then the other thing that's interesting about this point in time is that Bitcoin's up, over 100%, I think, year to date, right? It closed the end of last year around 15.5, and here we are around 34. And for the first, for the first part of the year to date, the price of miners has actually been going down, because there's still this kind of oversupply, and people will want liquidity if they can't get them online, so they'll sell them. And it's a kind of buyer's market because the oversupply, and so that sort of increases the potential upside of this strategy, which is the buying power of Bitcoin has increased 100% year to date, and the price of miners has fallen like non-trivially, right? So I think that gives an extra upside to the strategy. So we did worked with a startup called Stocker, which is a kind of fintech. They have licenses in Luxembourg, so they're kind of the top level security token and regulatory technology provider. So we ran the first series, actually is complete now. So we'll be looking to buy miners and start the first series and kick off the next series. So the first series was a non-US vehicle, and then we have in works a US structure, which is a little bit of a different structure with brokers and things. So we'll be talking about that publicly within a few weeks, and then also another international series as well. So each series is kind of a separate accounted instrument, because of course the price of Bitcoin will be different at the time of the start of it, and the price of ASICs that it achieves will be different. And then what we do with the ASICs, we put them in a bonded warehouse. We don't operate them because if you start using a miner, now it's a used miner, and used miners have a much lower price, right?
Yeah, you want to sell the new ones.
So we'll keep them in a new, still shrink wrapped, ready to go, right? And then sell them back to the market once things improve. So once the excess inventory is used up, that will be one kind of upside, because then immediately you're at the price the manufacturers want to charge, and the manufacturers would have a lead time because of the manufacturing process. It takes about 6 months typically. So we could provide miners from inventory faster than waiting for the manufacturers to build them. And of course, once we get into a kind of surge pricing scenario, that can also create an upside. So we'll track that. It's a kind of one-shot strategy. So we buy the miners, we hold them, and we sell them back, and then we wrap the fund up and pay out.
Okay, so you guys.
I think the other unique thing to keep in mind about this fund is it's Bitcoin basis. So the hurdle rate in fund terms means the return on investment it should achieve before the fund manager takes a performance-related success fee. And so what we're saying is basically, we won't charge a success fee unless you make more Bitcoin than you put in. So all the buyers of the Series 1 paid with Bitcoin. So if they put 1 Bitcoin in and it doesn't do very well and they get 1 Bitcoin out, there's no success fee. If there is, if they get 1.5 Bitcoin out, then we take 20% of the upside, and then there's a 2% management fee, plus the warehousing fees and those kind of things that are passed through. So that's the strategy. We think if people have a look at the data, it's a kind of interesting opportunity. Of course, there are risks in all these things. The market can surprise you, and Bitcoin is volatile, and it's not it's hard to come by precise data for how much inventory there is in miners, how soon the hosting will be available to put them all online. So there are kind of external risks as well, but it's still an interesting strategy, we think.
Yeah, I love that you guys don't collect fees unless you basically outperform Bitcoin. I think that's a really cool feature. And very attractive for an investor, and that's available to accredited investors, which you probably say. But it makes a lot of sense, right? These ASICs fall in value. They're still depressed. You see how they shoot up in value when the Bitcoin price during bull markets, and right now there's a big discrepancy, and so there could be an opportunity just from strictly supply and demand. Right. You guys are buying these ASICs, you're keeping them new and not used in the warehouse. And then you're going to kind of take the driver's seat in the secondary market to sell them once demand comes back online. So it makes a lot of sense. And it could be a strategy that outperforms Bitcoin. And then you don't collect a fee unless you do outperform Bitcoin. So I think it's a really cool strategy. But you guys, you talk about the lead times with the ASIC manufacturers. And there's a lot of concern that there's only like 2 or 3 big time ASIC manufacturers in Bitcoin, right? There's like a centralization risk way at the top at the ASIC manufacturer level. And Blockstream kind of set to address this a little bit by producing their own ASIC, right? You guys acquired Spondooli's intellectual property a couple years ago. How's that going? How's producing your own ASIC machine going? I would love to just hear any kind of updates you can give us on those developments.
Yeah, so I mean, the team's been hard at work on, designing a new generation miner. So Spondooli's, the team has made multiple previous generation miners, so they have a track record of doing that. It has high technology risk, so I think that's a key factor that people have successfully manufactured in volume competitive miners on a previous generation CPU technology. So that's well in process, and we would expect to have miners in market, later next year, basically. So we are sort of taking the time to do some interesting optimizations because of the state of the market, right? Normally people are rushing to market, but as we were just discussing about the basic strategy, there's kind of oversupply, right? So there's no kind of financial benefit to rushing, and there's potentially a benefit to taking the time to do some extra optimizations so that when the market comes back, we are a bit further advanced in efficiency and technology.
And, did you guys see this as a business opportunity, or did you see this more as a move because you think it's important from a network standpoint, as the health of the network, to have multiple options for ASICs, for people who want to buy ASICs, more ASIC manufacturers, the better? Was it both?
I mean, a bit of both. So, like others, we are in the Bitcoin sector, we're looking on at sort of centralization risks. And that was one of the factors that, caused us to look at this in detail. Another thing is that most of the current manufacturers are, they wouldn't be making the ASICs themselves, the chips in China, because those are typically manufactured outside of China, like TSMC, Samsung, etc. And now Intel also is entering the contract chip manufacturing, so sort of manufacturing chips on spec for other people. with their fab. But I think that one interest is to have more geographic diversity of the incorporation and the manufacturing process and the supply chain to actually manufacture the finished miner. And at the moment has a quite high concentration in mainland China. So that's kind of one factor. And the other factor is that, mainland China has from time to time kind of tried to push back against Bitcoin, ban different aspects of Bitcoin and then unban them. So there's some extra uncertainty about our jurisdiction when it comes to being, the primary manufacturer of the equipment.
Yeah, I mean, I think combating those centralization risks in any way we can is important just throughout the entire Bitcoin network. If we could just decentralize as much as possible. So I really applaud you guys for getting in the Asic game. I know there's probably a lot of investment in there. And so I wish you guys all the best as you try to engineer the best product you can. And but you guys, Blockstream, I mean, it's hard to keep track of how many hands you have in the industry because you guys are working on Lightning, you guys are working on custody solutions, ASICs. I want to pivot a little bit to the launch of Greenlight, which I thought was a very, very cool thing. It's basically like Lightning as a service solution. And I was looking at a tweet from Dr. Callie now. He was kind of explaining, and he says, if you're not bullish on Greenlight by Blockstream, you might want to talk to your doctor. I built a simple program that creates a new Lightning node. The node takes around half a second to start. I will probably implement this into everything I touch, starting with LN bits. And it's just very exciting to see almost plug and play Lightning solutions like Greenlight. And it's non-custodial, which I thought was really cool. So maybe talk a little bit about why you guys built Greenlight, why you thought it was important, and what it enables people to do with the Lightning network.
Yeah, so it's I think over time, some wallets and services started with custodial Lightning, and of course some popular services and wallets are actually custodial. But over time, there's been increased interest from the service providers and users for non-custodial Lightning, and of course there are many wallets that offer this mode. So what we did though is to provide a kind of lighter weight way to be non-custodial. So it sort of uses a cloud-hosted, very light, dense node based on core Lightning to sort of reduce the amount of storage and bandwidth and interactivity you need on a wallet, while still giving your wallet enough information to verify that, what you're signing is what you intend to sign. So in a way, it's a bit like the interaction on the main network between a hardware wallet and the Bitcoin network. So if you think about a hardware wallet, it doesn't actually receive a lot of the data, right? It just sort of, you tell it what address you want to sign and how much, and it verifies that the change comes back to you, and then it relies on the network to enforce the rest. And yet that's considered to be one of the most secure ways to do Bitcoin. So we have a concept like that for Lightning. So it's a kind of lightweight protocol. It involves a lot less data exchange between the wallet and the network. So it should start faster, which is what Callie is describing there. And also be kind of easy to integrate into applications which are not themselves wallets, right? So a kind of embedded Lightning because it's so much lighter and simpler to integrate. So it's another trade-off, and there are a number of pretty cool development kits and sort of full node wallets that push the envelope of being, quite pleasing and efficient to use, a good experience. So yeah, we're just adding to that environment and making it easier for developers to integrate, and hopefully providing a fast, reliable experience to the users as well.
Yeah, it reminded me of a product Breeze put out too, just allowing developers to easily integrate Lightning into their apps and just removing the complexities of Lightning. Because it's been a barrier of entry, I think, for people, especially ones that aren't technical. If they're trying to figure out how to incorporate Lightning. It's tools like Greenlight that are going to make it a lot easier for developers who might not be familiar with Lightning or even Bitcoin, that they can just plug this in. So very cool.
Actually, so Breeze specifically is start switching over to use Greenlight, and Greenlight is using Breeze as the LSP, which is part of sort of the fast start of Lightning experience. So you've got inbound ability to receive money, and a few other wallets and services. So we'll see how that progresses.
Yep, and then LSP is a Lightning service provider for people who might not be familiar with it. So check out Roy Scheinfeld's blog post on all things Lightning. It's very cool that Breeze is incorporating Greenlight, and he's just very talented writer and educator on Lightning products like this. So go check out Roy's work. Just a little shout out to Roy there. Now I want to pivot once again because actually let's stick on Lightning. I actually want to stick on Lightning for a second because there's something that I heard interesting, and somebody described the Lightning network as becoming a connective tissue of layer 2 solutions. And I think it really opened up my mind of kind of what we're seeing. And, when I heard about different types of layer 2 solutions, I always thought maybe it was a like winner take all situation, but I just didn't understand that they actually could be interoperable with one another, and how Lightning could kind of help be a bridging protocol, I think you've called it. And I was wondering if you could think on that a little bit and explain how you're seeing Lightning develop as like a connective tissue of these different layer 2 solutions.
Yeah, I mean, I think it was sort of something that evolved. So as people start working on more layer 2s and more use cases for layer 2s, so Liquid itself, of course, seeing Lightning, seeing use in the Lightning. So for example, Boltz HQ is using Liquid Bitcoin to rebalance main chain Lightning channels. And then there are some other Bitcoin layer 2s like Fedimint and Cashew, and they're also using Lightning as a way to move funds in and out of those layer 2s. So I think Lightning ended up sort of organically being used as a way to move value between Bitcoin layer 2s, I guess. And I don't think that was sort of planned, but it's convenient and fast for the task, and so that's how it evolved.
And do you think that's exciting, where we could see kind of these different solutions come out, and they'll actually be able to, let's say, talk to each other, to put it in layman's terms, like through Lightning?
Yeah.
That's kind of excited way that you're seeing this industry evolve?
Yeah, I mean, I think it's a positive development, because otherwise a question you'd have as well, there's lots of layer 2s, and you'd worry you might get fragmentation, or how do you get money into it? And they've made it actually very simple, because all you have to do is send some money to it using Lightning, and you're ready to go. So it's a sort of easy, fast, sort of standard way to move funds into layer 2s and out of layer 2s. So it takes a lot of the friction that people might have worried about out of the equation.
Yeah, you don't have these like competing network effects, essentially. It's just kind of self-reinforcing almost, which is cool. It's very cool. Yeah, so the other thing you guys have been working on, there's so many, is obviously you guys have your own hardware wallet, which is the Blockstream Jade. I have one myself. And you guys recently partnered with my company, with Swan, to bring about a new collaborative custody solution, like a 2 of 3 multi-sig, where customer holds 2 of their keys in Jade devices, and then Swan holds the 3rd keys to assist with any kind of recovery. So that's the collaborative custody component of it. And so why did you guys decide now's the time to team up with a company like Swan to bring about a new collaborative custody solution?
Yeah, I mean, I think that as we were talking about earlier in the show, that it's interesting and provides value to users to self-custody their coins, so they have more sovereignty. But it's it can be complicated for users, and maybe make them worry that they're doing it correctly, or so on. And so I think the collaborative custody model is interesting in sort of making it a bit easier and safer, because there's a service provider that will help you in a number of backup scenarios to ensure you're doing the right thing, and to stand ready to help you recover from some types of backup failures. So things like that can then help more users to sort of benefit from the sensor-resistant, unseizable properties of Bitcoin, which is, to my mind, what it's all about ultimately. So basically making it easier and safer to do that. And so we were pretty happy to, work with your development team to sort of make that, provide the integration hooks to make that a very seamless, easy to use experience for the Swan users.
Yeah, personally, I just think the more custody solutions, the better for the market, making it as easy as possible. And that's our goal at Swan, and can't have a better partner than Blockstream to help us do that. So it's an exciting launch, and so we appreciate you guys working with us, because custody has always been a focus of the company in terms of getting our clients into self custody as much as we can, educating them about it. And this is just the next step for us to do that. So I want to turn our focus to the halving, and maybe this is part of the reason why you think it's a good time to launch that basic note, was the different kind of mining market dynamics that are occurring as we head into the halving. What do you think that miners have to think about? And were you thinking about that when you guys thought, hey, this is the good time to launch the mining note? It's just the different dynamics that are occurring around the halving.
Yeah, I mean, because it's hard to draw, certainty about the market cycles, because we don't have that many samples of previous halvings. But at least, historically over the last couple, Bitcoin prices tended to go up after the halving, with the theory being, how the sort of metric that people use to rationalize why that might be, being that the supply of new coins is going to shrink after the halving, and then other things being equal, if there are less coins for people to buy, it will push the price up if the price was otherwise in an equilibrium. And so, yeah, I think, entering different parts of Bitcoin, buying Bitcoin or Bitcoin related or correlated things, it's an interesting time to do that just before a halving. And of course, people do think about profitability for miners going into the halving, because they will suddenly, get half as many coins. Of course, they still get the transaction fees, but it generally reduces the mining reward. But, as we've seen so far this year, Bitcoin price is up over 100%. So that more than, so if the halving were to happen now, and it's, not for some months, right, it would already be more profitable than it was in December after the halving, right? So I think the sort of price volatility can sort of overwhelm that difference quite easily. And in fact, that's, what has happened over the last decade, basically, right? That on average, Bitcoin has doubled every year for a decade. And so, the halving means that the reward will approximately half every 4 years. But if the price is doubling every year, it's gone up by 16 times a year every 4 years. So, the difference is that Bitcoin price is going up 8 times faster than, the effect of the halving. So effectively, the mining reward is still increasing on average year over year. But of course, you have like multi-year volatility and so on to contend with. So we'll see how that works out.
Yeah, well, we saw some of that volatility last week, right? Bitcoin basically shot up 35 relatively overnight, and but you weren't that impressed, Alex or Adam. You said it's a start, but we need a 10K candle on the daily.
Yeah,
you weren't that impressed, huh?
Well, I mean, it's sort of related to my bet that we would see a new high, like specifically $100,000 price, which is, the laser eyes to 100K kind of meme, but that we might see that before the halving, where most people are talking about, what the price might be after the halving. And that's statistically the case in the past, that there's been more price appreciation after the halving. But my rationale is just that the last couple of years have been sort of atypical in all regards, for the wider economy, due to COVID and supply chain and the Ukraine war and other geopolitical events and all the money printing that's happened. It's been anomalous financial environment. And of course, in the Bitcoin sort of sector, we've had some kind of industry negative news of all of our own, right? So the exchanges that have failed, the DeFi projects that have failed. And so for people outside of Bitcoin, they look at that and it makes them concerned. Whereas in the industry, we're just sort of thinking that, well, that particular exchange was doing something high risk and it failed. That doesn't really affect Bitcoin, right? So my view is that if not for all of those headwinds, Bitcoin would already be higher, on a long-term average basis, right? So I'm just thinking that as we get, a few more runs of positive news, we might get back to where we would normally be, which could put us over the 100,000 before the halving, and then, see some, post-halving increase as we have in previous halving cycles.
So we definitely had these like endogenous shocks, let's say, because of these casinos and frauds that were kind of internal to the industry, right? That could have affected the outside perception of Bitcoin as well as the price itself due to the fraud. And so you're personally, if I could summarize, like you kind of think right now, under 30K is kind of bullshit for this, pristine collateral digital money. If it weren't for these endogenous factors that we experienced over the last couple of years.
Pretty much, yeah. So, we'll see if we get to a new all-time high before the halving. Of course, if a spot ETF is approved and some of the dates make that a possibility, that can shift things all by itself as well, right?
Yeah, absolutely. I mean, you just think about the amount of available Bitcoin that's out there that's not being held by diamond-handed hodlers.
Yeah.
And you realize how much these Bitcoin these ETFs will have to buy. And you start to go, wow, that could be a lot of demand for a very, very scarce asset.
Right.
It's pretty phenomenal to think about what could potentially happen. I was wondering, actually, do you think these larger institutions, do you think it's only natural that eventually they'll get into the mining game?
I mean, they might. I guess you can sort of buy public mining stocks these days, and so some people would, that they have their own kind of risk profile, and it sort of depends how the company, what kind of risks those companies have taken in terms of debt or leverage and so on. But some of those have had upside through year to date as well, right? And I think I think there's a prospect that a spot ETF opens ownership up to different kinds of asset allocators. So with what's going on in the sort of bond and fixed income world, the traditional kind of long-term investment strategy of a 60-40 share bond portfolio is starting to have difficulty, and I'm not sure that this is something that's going to get resolved very quickly, because it seems like the central bankers are kind of out of ideas and sort of trapped between a rock and a hard place, as it were. It's not clear that they can pay off the government debt, and as they sort of print more money to pay the previous interest, they make things worse. So generally speaking, my interpretation is that we're going to see a long period of high inflation. So, in that environment, it can be difficult for pension funds and fund managers to preserve a retirement value target, right, with the high inflation. So, I think that with the advent of a spot Bitcoin ETF, at least for US allocators, they could usefully consider, not a 60-40, but some allocation towards Bitcoin, because it's done very well in the long run, and it could sort of turn around the return profile of their funds. So we'll see if that happens, but I think it makes a lot of sense. And Bitcoin is becoming sort of more widely accepted, I think there's a lot of sort of inertia and looking at other people that goes on in traditional finance, and sort of recognition and sort of old school acceptability or something of, you know, this kind of very traditional low risk fund managers and us, you know, playing with internet money, right? So that sounded like a wild story for a lot of years, but I think that is changing so that it's more like internet stocks in the early internet, right? So clearly there's a lot of upside, a lot of adoption to happen, and a lot of people find it very interesting. And so eventually they get resolved that, you know, they look over their shoulders at all the other asset allocators and public market financial institutions starting to offer Bitcoin products, and then it stops becoming a question about should we do it to being one that, well, we're getting left behind, we have to do it or something. So that might, you know, actually change the asset allocation strategies, which would have an interesting effect.
Yeah, it's like, why aren't we doing this becomes the question, especially when the bonds are going on 3 consecutive losing years for the first time in history. It's kind of forcing them to look elsewhere. And the correlations with stocks are kind of becoming more and more positive as inflation sticks around. So they might have to turn to alternative assets more and more, and then nothing offers the growth potential of Bitcoin. And so to me, it's obvious. And it's what I was talking to multiple pension fund managers last week, and they're starting to get it. They're starting to get it. And an ETF would certainly make it more accessible for those kinds of funds as well. So it's exciting times. I wanted to finish with just a really basic question, but something I don't know if I've heard you answer. It's just, you know, what has Bitcoin provided you just personally in your life? If you, just a very broad question, but I would just love to hear your answer.
Well, yeah, I mean, I was involved with sort of privacy technology in the late 90s, like PGP, anonymous remailers, and, you know, one of the previous generation electronic cash systems, which was by DigiCash. And that was in effect what we would call a stable coin today, right? But it didn't ultimately take off, and it was a bit centralized, so the company ran into difficulty, and that was the end of it. So, you know, for me, those technologies were very interesting and exciting to, you know, get self-sovereignty, to, you know, have a bearer asset, to have privacy for financial transactions. So, you know, to me, it's kind of very fun, engaging, and exciting development. So it's just like an endless source of fun and energizing things to work on for, and also for people with a kind of technological background. It has a lot of kind of scope for R&D that has immediate practical application that helps, you know, millions of users and potential future adopters worldwide. So really, it seems like a kind of one-off opportunity to make a difference in the world, right?
Yeah, absolutely. Well, Dr. Back, thank you so much for joining us and taking the time, and appreciate everything that you've done for Bitcoin over the years. As it turns 15, Blockstream just keeps coming out with different infrastructures. So if you're interested in some of the things we talked about today, check out Greenlight, check out the new basic note that they're offering. Adam, is there anything that we haven't mentioned that you want to talk about, or just maybe you can explain where people can follow you if they're interested in learning more about your work or what you guys are building at Blockstream? Let them know.
Yeah, so for Blockstream, blockstream.com, or at Blockstream on Twitter, myself at Adam3US, and then there are a series of Telegram support channels for individual products as well at Blockstream.
Awesome. Well, thanks, Doc. Really appreciate it. And you have a wonderful rest of your day. Happy Bitcoin White Paper Day, one day late, but can't wait to see what you guys build next over there. So thanks again for joining us.
All right. Thank you.
And that's all we have for Swan Signal Live today. It was an honor to speak with Dr. Adam Back. Just one of the pioneers of this industry, and it's so great for him to still be on the team working for Bitcoin to push adoption of this money. I just learned a ton, and I'm going to go check out Greenlight more myself. And we mentioned Swan Vault, so we launched that a couple of weeks ago. If you're interested in a collaborative custody solution, go check out Swan Vault. And then the last thing I'll say is Pacific Bitcoin. So this is your chance to lock in those cheap tickets. Once again, the early bird tickets, you'll get a full refund in February. And so if you're interested in checking out the Pacific Bitcoin Festival next year, now's your time to just pull the trigger, and you can always just return it for a full refund in February. So what's stopping you from doing it? Check out pacificbitcoin.com. Get your tickets today. And thank you so much for everyone who tuned in today at Swan Signal Live. Another excellent show is on the books for next week. So that's next Wednesday. We're going to be shooting. Thank you for listening. Like, comment, post. I appreciate it so much. And I will see you next week. I'm out.